All right. Good morning, everybody. We're here on a Friday, June 28th, last day of trading for Q2. And of course, we are on the cusp of a major geopolitical event with the G20 and the trade talks, of course, hanging in the balance. With that, we've talked a lot about it before, and we're just going to bring in our special situations analyst Carmine Ateo, as well as chart trader Brett Manning, to kind of highlight a little bit about the G20, what we'll be looking for, and probably talk to Brett a little bit about what his plan's going to be on Sunday night. Obviously, there's a lot of price action in between now and then, so should be an interesting conversation, I would say. But Carmine, you there with us?
Yes, I'm here.
Hey, Brett, you in with us here?
Sure am. Here I am.
All right, good morning, gentlemen. So before we break into the G20, Carmine, there's another geopolitical event, of course. The last two nights, and that would be the Democratic presidential debate. I think it was, 23 people involved in it for potential nominees. So we're still about 17 months away from the elections, but obviously people are going to start moving their portfolios in different directions based upon potential policy outlooks. So, Carmine, obviously it's still very early in the game, but I know you were watching both nights on the Democratic debates pretty intently. So, just for the subs out there, was there anything notable that stuck out to you in terms of potential policies?
Yeah, number one, let's start with healthcare. So the health insurance names are getting are showing some weakness today. UNH is down almost 3%, Aetna is down 2%, Humana is down almost 2%. To me, there's really not a reason for that because if you looked at the debate, only 4 out of the 20 candidates supported the getting rid of private health insurance and pay for a government-run health insurance plan. And many of the candidates that did not support it are sitting Democratic senators and lawmakers. So I think it's important when we look at these policies to look at what the chances are of passage of these things. And I went into depth on this on our April 23rd podcast. But if you want more information, you can look at that one. But basically what would be required is
just
a simple...
as a heads up for people, I reposted it just a couple of days ago for anybody that wants to give it a listen to.
Sounds good. Yeah, so just basically what would be required to pass something like that would be a simple majority in the House, 60 votes in the Senate, and a president's signature. And right now, there's not even consensus within the Democratic Party itself for that policy. So that just shows how tough it's going to be to pass. I still like UNH. I mentioned UNH as a play on this during that podcast on April 23rd. I still like that. Full disclosure, I am long the stock. Again, I'd still like UNH. I still like the healthcare names, and I think any dip is an opportunity because as these get closer and closer to the election time, I think more and more people are going to see how difficult such a policy would be to pass.
All right, Brett, you got any thoughts on it from a sentiment perspective? You usually have pretty good insight into things like this.
No, I just think it's a spectacular piece of insight, Carmine. I think in fact, I can't believe that was not, once we got the hands raised or not raised, it really was a failure of the moderators of the debate to not immediately follow up with a question, for instance, to somebody like a Bernie Sanders or Elizabeth Warren, that if you have senators here on the Democrat side who are clearly showing that they're not in favor of Medicare for all with no private option, then what would be Bernie's backup plan, for example? Obviously it becomes something that can't be passed. Then you have to find a way to make lemonade out of your lemons, and what would you do then? But yeah, I think it's a spectacular insight. It looks like that would be, given exactly what Carmine just said, that would be a non-starter as a policy plan.
Yeah, and I want to point out too that Larry Robbins, this is his number. Larry Robbins from Glenview Capital kind of did an analysis on this, and he found that there was 15 current sitting Democratic senators that are against Medicare for all. So first you have to get past that, then you have to find another 10 or so, Republicans.
Because you need 60 votes in the Senate, right?
Exactly. So, you only need a simple majority. So you need 60. So first you have to get past that, then you have to find, Republicans to support it if you wanted to get it passed, which is even less likely. So
there's probably an opportunity on the long side in some of these insurers if you can, manage to survive the
the headline.
The bluster, yeah.
Yeah, exactly. Well, one aspect of the debate that could theoretically be a lot easier to get done is tax reform repeal, because most of the candidates up. I know I'm sounding like the Fed beige book here with most and some, but but most of the candidates did support repealing the President Trump's tax cuts, and that could be done with 51 votes in the Senate. The difference there is because any policy that doesn't increase the budget can be changed with 51 votes. So that could be changed with 51 votes in the Senate. Right now, the odds are that 70% of the Senate stays Republican, according to the betting markets, though. So that's something to keep in mind as well.
I would assume capital gains taxes were discussed and supported.
They do support a higher capital gains taxes, but that question was not asked in either debate. But they do support that, yes.
Okay. All right. Well, thanks for that update. That's certainly helpful. And now we want to turn our attention, of course, to the G-20. So, Carmine, you want to start by laying out what the current schedule is, what's the agenda, who President Trump's meeting with today, so we could be aware of potential headline minefields that could be out there in today's trading session?
Yeah. So President Trump has a full slate of. He met with Japan's leader, Abe. He met with Russia's Putin. And he met with Germany's Merkel. And tomorrow he's got on the agenda, he's going to meet with Brazil's leader.
Bolsonaro.
Thank you. And then he's going to meet, of course, with Chinese President Xi. And then he's going to cap it off with a meeting with Turkey's President Erdogan. So
and the exact timing of the Xi meeting, I have that for around 1 a.m. Eastern time. Is that correct, Carmine?
Well, I think it'll be a little bit. It might finish around then, but it's going to start at about 9:30 Eastern time because it's going to start tonight, and because it's going to be 11:30 a.m. Japan time, so they're about 13 hours ahead of us. So there you go on that. They're 13 hours ahead of Eastern time. I'm thinking of Chicago, but so 9:30 a.m. in Chicago, 10:30 Eastern, 10:30 p.m. Eastern, and 11:30 a.m. Saturday in Japan. So.
Okay, perfect. Have there been any notable headlines from today at all?
So CNBC reported that the working assumption within the White House is that the tariffs would get delayed. There'll be a truce put into play for an unspecified period of time. But one of the key caveats they said was that the contingency for a trade truce would be for China to agree to enforcement mechanisms. Now, as far as I understand this, China needs to change their laws to be able to do that. And that was one of the key hang-ups from before. So if that's a contingency, that's a pretty big contingency. Now, I'm just going about what they said. But so the positive here is I don't think they would leak out to the press that the working assumption is that, that there will be a trade truce and delay of tariffs if they didn't have that worked out. But that's just something to keep in mind. In one of our last broadcasts, I said, I think the chances are higher than people think that the tariffs do go into effect. Do go into effect as far as the $300 billion tranche. But I think the chances are less now than when I said that earlier in the week, to be honest. But it's still definitely possible. And that contingency is just interesting to me because if that's the case, they're going to have to change their laws, and that was the whole hang-up to begin with.
Brett, do you got any thoughts on on that contingency?
Sort of. I think that it's mushier than it seems, and I think that there's two levels to the analysis. There's one that's a sort of hard reality level, but there's another that's a how they can spin perception level, and that's really important on both sides. So I think one of the most important questions right now is whether or not it's still possible to do something that amounts to a face-saving deal, and whether or not it's possible to put in place something that looks like China is making structural changes when maybe they're not ultimately that enforceable, but it's difficult for the public to know. So if the United States, if the White House wants to find a way to make sure they get a deal in place at some point, they've got a way to do that where the public isn't already so educated that they would be skeptical of it being an important deal. So I think that dimension is is pretty central at this point.
Yeah, that's a very good point. It's perception is everything. Just especially since we're going into election season, they're going to want to be able to sell it to the public in any way they can.
Yeah.
Okay, here's what I want to do. Carmine, I want you to lay out, because you're pretty well read on the situation, I want you to lay out your base case scenario. And Brett, I want you to kind of take note of it, and we'll circle back around to what your base case is, but to take note of what Carmine's base case is and how you might handle that come Sunday evening in the future. So, Carmine, you want to lay out what you think is the most likely fallout from these meetings?
Yeah, so based on the reporting so far, I think the most likely result is that they agree to a quote unquote trade truce. Now, the details will be key as far as what is enforced and what is not enforced. But I do think they'll agree to some type of trade truce where it'll delay the implementation of a $300 billion tranche. Now, like I said, there is that slight possibility still that those tariffs do go into effect because of these other contingencies that they're laying out. And as far as Sunday night, if that is the case, I'm not sure if the market moves up as much because I think that's being priced in already. But if the worst case scenario happens where they do not agree, I think we see a decline. And I wanted to ask you, Brett, if there's a decline there, would you be a buyer there? Because I think. Would you think that the Fed is, basically at the backs of the market right now, and that may become the focus?
I think it depends on the details. I think so. Let me get this straight. So your base case is what I would call a friendly no deal. Is that right?
Exactly.
Okay.
Exactly.
Where we agreed we're not going to put the new tariffs on now, and we will come up with something similar to kind of what we saw last November.
Right.
Yeah, okay. So we're going to agree that, we're going to get back to the table. We're going to figure something out. We're not going to put the new tariffs on now. And, we'll get back to the process of working out a deal. Even though there's not an actual deal in place, we're going to stop the escalation and we're going to get back to the negotiating table.
Exactly. But the president will try to frame it as a deal, even though it's not really a deal.
Yeah, I think, but we've been around that enough times. Eventually that stops working quite as well. So
yeah, exactly.
Yeah, I think, and the other level is, so since the details are important here, the question would be, what would be the mechanism of communication that the markets are going to trust? And I would think that it's going to be a combination of some kind of maybe press release by the White House like they did last time, then coverage and analysis in U.S. media plus coverage and analysis in domestic Chinese media will add up to a sense of what the reality is. But that's probably going to be a big part of it if you're talking about how the futures act on Sunday night, is just because we're not going to get a live recording of their conversation. So we're going to have to understand what the reality of the situation is and how likely it is that this is a process that can work at some point in terms of producing a deal. Because I think that a friendly no deal at this point without the extra tariffs immediately coming on isn't really going to change anything for the market.
Right.
I think that if Trump storms out of the room and we get a tweet on Sunday morning that says the new tranche of tariffs are going to come on, I think that's going to be a knee-jerk to the downside that I would buy. And it's not necessarily because of the Fed. I think that it's because we would realize that. So I think that there's this double game going on at this point, because I think that the White House really does want a big rate cut at the end of July. So I think that managing perception of the situation, if it looks like we're headed toward the end of the trade war, there's a much less likely rate cut coming from the Fed at the end of July. And I actually think that the White House is aware of that. And I think that just preserving the sense of the uncertainty around trade till the end of July is actually part of the plan. So I think that threats aren't necessarily going to be taken as an economic disaster, because we've seen a lot of threats and a lot of big bluffs. And I think that just a tweet going out saying, we're really thinking about putting those tariffs on because we weren't happy with the meeting, I don't think that that's going to be something that's going to take the market down too far at this point, because it's not that far out of line with what I think people think the situation is. So I probably would, and I guess it's kind of like what you said. I guess by extension through the filter of perception of the White House that the Fed has the markets back. So, but yeah, the positioning is the other big part of it. Something Gavin and I talked about earlier this week, and that I talked about again this morning, where you have what was called by Hartnett at B of A as the all-time greatest disparity, the all-time most pessimistic positioning in markets relative to market performance right now. So there's only so much selling you're going to see in a context like that in knee-jerk reaction to headlines in the first place. So I think that leads to a market that's sort of overbought and underowned, which has been my theme for this year. And in that kind of context, the opportunity is generally on the long side after headline-driven knee-jerk drops. So that all kind of adds up to me.
Another point too is that if they decide to go with the tariffs, I doubt it would be 25% because you kind of don't want to fire all the bullets in your gun at the same time.
Right.
So I think they would start it off at between 5 to 10%, and I think when the market sees that, once it settles down and sees that, it might be another buying opportunity as well if that scenario does come to pass.
Yeah,
and I think that it's even more than that. I think they want as many bullets to fire as possible. Which means
right.
The first one is actually just the threat without the move, and then it's the next threat without the move, and then eventually it's the small move, and then it's the threat without the big move, et cetera, et cetera, et cetera.
Yeah.
Yeah, no, that should be interesting to see how it plays out. And I know we had a feedback question about the no deal, so I think we just addressed that. Let's just throw out the surprise that nobody, Brett, I know you were talking a lot about this in your morning note, the surprise that, say we do get a deal.
Yeah.
What do you think the market does in that? I mean, obviously the launch higher is the move, but do we get the knee-jerk reaction faded in that scenario? Or with the way positioning set up, Brett, as we've talked a lot about in the Sentiment and Flow show, do we get kind of that maybe blow-off top that people have been somewhat looking for, the push towards 3,000?
Well, here's the problem with that. I mean, I think the knee-jerk reaction rips because, yeah, people aren't positioned for that situation. But then, you're going to get this consideration of, oh, well, what are the Fed funds futures going to look like tomorrow? There goes your rate cut. And it's really maybe not just all about trade. There may be some other things going on in the economy. And so I think the knee-jerk, though, would be excessive to the upside. I think it would be dramatic. And the question is maybe 2-3 days later, do we roll back over and give a good chunk of that back up as we're trying to figure out, is this the sort of the blow-off top to the market overall? And even with a trade deal, do we still start to see some deterioration? And, where's the Fed going to be on this at this point? So I think that people would have to work that out. I mean, if you get that and you still get the sense that, the Fed is still lining up to cut, then it's just off to the races as far as the eye can see, because people just aren't positioned for that. But I think that's really unlikely.
I do too, but
Yeah.
that's why it's fun to discuss, right?
Yeah.
It would be more fun to discuss if Trump just like had a G in a headlock or something like that.
I almost feel like if they had a deal, and this is going to sound a little maybe too cynical, but I almost feel like if they sat there and in private, they go, oh, man, we're really on the same page suddenly. We can get a deal together pretty quick. Hey, I'll tell you what. Let's wait until August 1st. Let's wait until
after the next Fed meeting.
Yeah.
Yeah.
Because the Fed's not going to take that cut back. Because inflation is still really, they're going to want 2% plus for a while before they're hiking. Well, let's go ahead and get that cut salted away, and then we'll go ahead and announce a deal the next day.
Here's why I would have a hard time envisioning that scenario, Brett. And that would be if the Fed does cut, then China has to manage outflow from the yuan, right? So that means that they have to put a lot more of their balance sheet to work in order to stabilize the yuan.
It depends on, the market is expecting it. I think we've maybe seen some of that.
Yeah, no, that's true. So, all right, is there anything at this point that you guys would like to add? I think, we've pretty much addressed the questions. Sunday, I know, Carmine, you'll be posting your press report and stuff like that. Brett, I'm assuming you're going to be keeping your eye on the futures for a potential trade. I know I'll be there, so we might have some follow-up commentary on the site come Sunday evening if there's anything of note, but do you guys have anything to add at this point?
No, I think that's it. Oh,
I
actually
got one extra. Oh, cool. Sure. Go ahead.
Yeah, I have one extra question. So Carmine, I'm curious. Let's say the scenario that Brett described where Trump says, you know what, I'm not satisfied with this, we're going to institute these tariffs. When do those tariffs then go into effect?
Well, he could put them into effect any day he wants, but the first day that they could go into effect legally because of this Commerce Department review is July 3rd. So he could sit. They usually do this on Fridays, I've noticed, and July 6th, incidentally enough, is the 1-year anniversary of the start of the China trade war. But but just a little factoid there. But
July 6th, I would have had it pegged at January 29th of 2018. No.
they started the steel and aluminum tariffs at that time, but they started the first China tariffs.
For the first action, I'm going off the Mnuchin comments at the whatchamacallit at Davos that seemed to really kick it off for me. That's why that's selling. But yeah, okay. So the first action was taken on July 6th. I got it.
Yeah. So depending on how you look at it, the anniversary of the tariffs, we'll put it that way, and it was July 6th for China. But yeah, so Jim, the first day that they can put the tariffs on will be July 3rd. But he can make that day any day he wants. He doesn't have to be that specific date. He can say we're going to put them on August 1st. And we're going to put them on, July 10th or whatever. They usually do it on Fridays, though, so let's keep an eye out for that.
Yeah, so I wanted to know if I was able to handicap, the likelihood of something going in almost immediately. So that would be, Tuesday, right? So Tuesday would be the first day
Wednesday.
that he could, or Wednesday. All right, so that would be the first day that he could do it, and it would be on a holiday week, so that would be very interesting. And then I wanted to see, if he puts a timetable on it 2 weeks from now, well, then guess what? Now we got that wiggle room again where we can be playing back and forth the headlines to figure out, now what's going to happen? Is this really going to go into effect? And then the market comes in and all of a sudden we head closer to that deadline date and things are starting to look good again and they postpone it, so we're back in that mix. I just wanted to be able to get a sense of what that timeline would be, so I appreciate that color.
Yeah, the longer, if let's say he sets a date, the longer the date is out, the more uncertainty there'll be, because you'll have reports coming out saying, hey, we're getting close, we might delay that date, or no, we're not getting close, we're going to keep that date. It's going to go back and forth. And so the more longer he sets that date out, the more uncertainty there will be.
Yeah, absolutely. And so I guess if they do put a whatever deadline on that would be a crucial element to consider. If he says it's going to happen immediately, then that would be really bad. That would be really bad for the market.
Right, but like Brett's been saying, that might be a buy to dip opportunity.
Even if it was that aggressive, though, Brett.
Which aggressive? If they did what?
Immediately, like the first day that Trump gets back, he's going to institute those tariffs.
25%?
Yeah, on the $300 billion.
If they actually go into effect immediately, then that would probably be, that would be tough to buy that one, I suppose.
Okay. All right, that's the only question I had.
All right. Carmine and Brett, anything else to add? Just for those watching while we've been talking, really not a lot of action in the market.
I just had one last point to make about the Democratic primaries and the debates that we saw. I think that one of the most interesting things to monitor now, I've got this theory, and this theory is that what we're seeing on the Democrat side in terms of the primary voters and the people being polled is a kind of Keynesian beauty contest situation, a game theory process that isn't necessarily the direct process of who the voters like the most as the candidate. And I think that that's the explanation for Biden's strengths in the polls. It's not the necessarily name recognition. I actually think that people being polled are gaming the situation in a way, and I think we're going to be able to figure that out a lot more. And if that's the case, it's going to seem a lot more difficult to beat him, because it means that people have decided what they're doing well in advance. And I think that it spins around this main point. I think that uniquely in this upcoming election, we have a situation where you're going to see a massive turnout from the left, no matter who the candidate is, and a massive turnout from the portion of the right that is Donald Trump's base, no matter who the turnout on the left is. And I think it could be like one of the highest turnouts that we've ever seen at this point. And again, I think that it doesn't matter which candidate it is from the left. I think you're going to see that same dynamic. In other words, I think that the majority of voters have already figured out whether or not they're going to vote for or against Donald Trump to be reelected, no matter who the candidate is from the left, which means the entire game is essentially about the center, swing, and moderate right, and whether or not you unite the right to turn out in support of Donald Trump. And I think that what we're seeing right now is Biden being chosen as essentially the antidote to Trump. That's the candidate that would reduce turnout on the right. Whereas if you turn the general election into a referendum about socialism, that changes that whole turnout picture. But if you turn it into just a simple referendum on Trump, then it's one thing. But if you turn it into, say, Bernie Sanders or Elizabeth Warren and a referendum on socialism, then it's a completely different kind of election. And because I think we've seen in these first two debates who the strongest debaters are going to be, and certainly it seems like the press is united behind Kamala Harris being the strongest of the debaters and Elizabeth Warren maybe running second there. If Biden maintains his lead in the polls, then it will suggest that the theory that I just proposed is correct, which means people aren't worried about selecting the candidate they like the most or even the policies they like the most. They're just simply gaming the situation to decide who's going to be best at reducing the turnout on the right. And I think it's going to be interesting if we start to see that come together. And I don't know if you have any thoughts on that, Carmine.
No, that's pretty much what I think as well. I just think that as these debates go forward and as the primaries get closer, you're going to see a lot of movements in those polls. You're going to see, I think after this first debate, you're going to see Senator Harris and Senator Warren move up, and you might see Biden's percentage, even though he'll still be first, move down. And you might see, Senator Sanders move a little lower in the polls as well, even though he maintains his percentage. But I think it's going to be a battle between, at least right now, it's going to be a battle between those four. And 3 out of those 4 support, raise their hands for that question about eliminating private insurance. Mm-hmm. Now again, it's going to be difficult to pass because of the other senators and congressmen don't support it right now. But in politics, I'll just throw this out there: when a president gets elected, you do tend to see their party galvanize around them. You saw that with President Trump, that a lot of the Republicans that were total free traders now are very supportive of what he's doing with China. So that's something to keep in mind as well. Now, again, they do need 60 votes to pass that bill. So it's very right now it's a 70% chance, according to betting markets, that the Republicans keep the Senate. If you want to talk about the president right now, it's a 42% chance President Trump gets reelected, and the Democrats are staggered below that. But so again, that's a 70% chance to keep the Senate. That's 51 or more votes. So a 60% is even less likely. It's minute possibility right now. So that's going to be something to watch, because once there's a Democratic nominee, and let's say it's Bernie, or I should say, let's say it's Senator Sanders or Senator Warren, the party's going to galvanize around their position. So you're going to see a lot of these senators that say, "Oh, I didn't support that in the past, but now I do." Just like you saw with President Trump and the Republican Party with tariffs.
Right. Well, let me suggest that's exactly what I'm talking about. What I'm suggesting is it may be interesting to see if the primary voters and the people being polled on the left don't move quite as much as one would think they would in the direction toward those candidates after the debates. It would suggest that they're already looking ahead toward who's going to have the best chance in the general election, given a mindset that the swing vote is sort of the never-Trumper moderate right. What I would call the McCain-Romney true believer base is that swing vote. Do they go out and vote? Do they unite behind Trump? Because they probably don't want to, but they would if it's about removing the possibility of a socialist healthcare system.
So what you're basically saying, Brett, is do the Democrats put forth a far left candidate that might not get the support from the center out of just fear, or do they try to find that centrist candidate, like you said, to kind of shut down that moderate right?
Well, and more to the point, does the Democratic base already know that game? Because that's what I think is happening. I think that Biden isn't the greatest candidate in the world when you take the sort of progressive movement that we've seen, but he is he has decided, I think right off the bat, he's structured his campaign around putting on a show of how he can get the center. Everything he's done is structured around showing left voters that he can get the center. And so if you go with the assumption that everybody on the left is going to want Trump out, then the whole whether or not somebody can win the general election is going to become about whether or not they would offend the center or the sort of Romney-McCain base. And I would think I think that explains why he's had the lead in polls he does. And so my point is simply, because of this debate performance, he wasn't the standout performer. There were other standout performers. One would think that his lead would slip possibly significantly. He'd still be in front, but you'd see a notable change. And so I guess my point is, incoming polls, if we don't see a notable change, then that will suggest that that's the game that's in play. And it'll be very hard for some of these other candidates unless they start to make a really strong move to the center. Like Kamala Harris could probably take the thing if she would go out and start to do the same thing Biden is doing, start to court that center and to show the left that she can. Then I think she would go charging ahead. But she raised her hand there. And that's a move that says, I am going for this, progressive, serious, heart and soul progressive vote. And the question is there a game theory landscape in place where that's going to prevent her moving up much, even if people like her a lot, simply because they don't think that she's going to be able to divide the right?
Well, I think Carmine, when I was talking with him on the side, brought up a pretty interesting point on the Kamala Harris raising her hand. Because didn't at first she not raise her hand, Carmine, and then she said that she misunderstood the question, even though
she raised her hand, and then she later said today on Morning Joe, I believe, that she misunderstood the question.
But it was the same question from the night before, so she probably was
Right.
well prepared for it. So
I got a question. Is Howard Schultz still running? I thought he dropped out.
Yeah, he hasn't decided yet.
I think he dropped out too.
Somebody
Right
put
now, there's a
question in.
betting market on that. He has a 30% chance of running for president.
He's got to be in the VP running too, I would think, right?
Oh, that's pretty interesting. Actually.
That'd be a strong ticket, I think.
I mean, if you put Kamala Harris with him as VP, suddenly it shifts that picture.
Yeah.
That's interesting.
All right. Well,
but I think you're right, Brett, about the turnout on both sides, because especially
I think that Dems could put the San Diego Chicken as the nominee, and they'd have the all-time highest turnout. I wonder if they could put George W. Bush as the nominee, and they'd have the all-time highest turnout.
Well, the
never Trumpers, right?
Yeah.
The turnout's going to be high on the right as well, you said. Yeah. So, do you wonder though? Let's say let's say the nominee is Biden, and let's say that progressive base isn't really that excited about him. Do they?
Trump has done that work for them, I think.
Yeah.
He spent every day in office so far trying to make sure the turnout against him on the left is there.
Yeah. All right. Well, we got 17 months of fun debates on this, so it's going to be a really interesting race, that's for sure. And it's definitely not going to be your conventional. We kind of saw that erode in 2016. I felt with Trump and Clinton, and I see a further deterioration from the norm in politics going on. So, going to be a fun 17 months and a wild ride for the markets. But I think that's going to do it for today. We're going to post a replay of this. Any last words?
That's pretty much it for me.
Me too.
Right. All right. Well, gentlemen, thank you so much for joining us this morning, and I think it's going to make for a nice piece. Going to, like I said, post the recording here shortly.
Thank you, guys.
All right.
Thanks,
Bye,
guys.
gentlemen.